Hello guys and welcome again to my channel. So we are here in I guess the fifth or the sixth video about merchandising accounting. Alright, so in the past episodes we talked about the entries for merchandising entities that are unique versus the service entities, and after that we did have some illustrative problem, and this is where we came to as a particular, what do you call this, progress. This is our progress. Okay? So our progress, illustrative problem, and then we made some general journal entries and adjusting journal entries. And the general journal entries has been posted to the T accounts or the ledger. And after posting it to the ledger, we developed an adjusted trial balance, an adjusted trial balance, this one, and we completed the worksheet. So the worksheet is the topic for the last episode. Okay? So we are already at step 5 of the accounting cycle. So we have to go to step 6. Okay? So before we start with the step 6, which is the preparation of the financial statements, I would like to tell you that as per experience, actually there are 5 components of financial statements. The first one would be the statement of cash flows, which explains why is it that the ending cash balance is just like this, something like that. And then we have the statement of financial position, which is, I guess, the most important financial statement for me. That's the most important financial statement because it shows the assets, the liabilities, and the capital of the company. And what makes it very important is that I think that the main financial statement is the statement of financial position, and all the other 4 financial statements are just supporting computations for the statement of financial position, because the statement of financial position includes cash, for example. So the cash flow statement is just an explanation why is there a cash balance like that. Okay? And the statement of financial position also has the capital balance. So the statement of changes in equity, which is one of the financial statements also, is just an explanation of how did we get how did we get the capital balance. Okay? And then of course on the capital account also, it includes the revenues and expenses. So revenues and expenses are detailed in the statement of comprehensive income. Much more on the notes of financial statements. Because on the notes of financial statements, it only specifies what are those amounts in the 4 financial statements. So I guess that's the most important, the statement of financial position. So let me go back to it. The financial statements are first, the cash flow statement explaining why there is a cash balance like this. The second is the statement of financial position. And as I mentioned, for me, that's the most important financial statement. You are going to get a lot of information from it. Third is the statement of comprehensive income, which is just revenue minus expenses, which is focused on the performance of the business. Fourth, we have the statement of changes in capital. So this explains why the statement of financial position has a capital balance of like this and like this. And the notes to financial statements were in um, the notes to financial statements. Normally, if we're going to have a shortcut, it specifies the numbers that were seen on the 4 financial statements. Like for example, if there is an accounts receivable of 10 million, the notes to financial statements gives a composition of why is it 10 million. Who are the customers that contributed to this balance or the merchandise inventory, what are the items in the merchandise inventory, and so on and so forth, which is why the notes to financial statements is, I guess, the thickest, or what do you call this, of all the financial statements. It has the greatest information. It is composed of a lot of pages. Okay, so those are the 5 financial statements. Now, Let's prepare them. However, let me tell you that the most tedious, aside from the notes to financial statements, the most tedious to make is the cash flow statement. And of course, I wanted to start with the cash flow statement first. However, it's better if we start with the statement of comprehensive income. It's because we have our worksheet here. If we talk about cash flow statement, we need other information other than the worksheet. Okay? But basically, I wanted to have the cash flow statement first because it's the most tedious and I learned. So this is a learning before we start. I learned that if ever you wanted to be more productive during the day, you have to start with the most tedious and the things that you really don't want to finish. So I realized this when someone said that if your job for the day is to eat frogs, you have to start eating the biggest and the freakiest frog so that you'll be productive. But then again, I cannot start with the cash flow statement because I need other information other than the worksheet. Okay? So let's first start with the first one, statement of comprehensive income. So let's erase this. Wait for it. Just wait for me. Okay. So from the worksheet, let's make a statement of comprehensive income. I'm so sorry, it took time, but I wanted these videos of mine to be as natural as possible. So I'm not really editing some mistakes. I'm not really editing to make the video faster. I want to at least give you an ambience of really having a face-to-face class with me. Okay? So let's have the statement of comprehensive income. Yeah. Supposedly, the first one should be the company name first, and then the logo of the company or the header, and then statement of comprehensive income as a report for the period December 1 to 31, 20x5, something like that. So I will not put on the company name and then the logo because again, we need to economize the space. So what's the first part? The first part is all about the computation for net sales, something like that. So you will start with gross sales. So the gross sales is according to here. Don't know what is the gross sales. The gross sales is 782,000. But then again, we are computing for the net sales. Okay? So let's continue. we have less, again, sales discount. So sales discount is actually the discount that you have given your customer for prompt payment. So you are lessing the sales discount because when you say we sold 782,000 but you gave, for example, 82,000, that is not really your sales, the 782,000. It's only 700,000 effectively. Logical, right? So in this particular illustration, we have a sales discount of 20,850. 20,850. And then less another one, we have sales, returns, and allowances. In this particular problem, we have 43,000. Yeah. So meaning our net sales is only effectively, it started with 782,000, but we gave customers discount of 2850. So minus 2850 minus 43,000 for the customer's returns, we have 718,150. So that's the net sales. So the next one is the net sales should be deducted with the first expense. I consider this first expense and the second one is the operating expenses. But actually, technically, this is considered as cost of sales. You have to compute for the cost of sales. Maybe we put this a little further. 718,150. So what I'm doing this is the indentation style wherein the summary of this will be indented. That means that's the sum instead of putting it right here. So let's have the cost of sales. The cost of sales is merchandise inventory beginning, which is in our problem, the merchandise inventory beginning is 426,000. Let's indent this 426,000. And then the merchandise inventory beginning, or the inventory that was not sold last year or last period, will be added with your net purchases. Net purchases. Yeah, let's put add net purchases. However, the net purchases has its own computation. You start with the gross purchases. So in here, we have a purchases of 212,000. However, that is not the net purchases. It's because you have to add the freight in. Because aside from the selling price that you have paid for to your suppliers, you have to consider also the transportation in or freight in of bringing those inventories from the supplier towards your present location that you intended, like stores and etc., or warehouse if ever. So you have freight in. So do we have freight in here? We have 2,000. 2,000. So the total cost because of purchasing merchandise inventory is actually 214. Okay? If there is no, let's put first total, 214,000. If there is no, what do you call this? If there is no purchase returns and purchase discount. But there is, right? So less purchase discounts. So how much is the purchase discount? According to the problem, we have a purchase discount of 2,300. So we have to deduct that. Okay? And then we have to less another one, the purchase returns. To get effectively your cost of purchasing. Purchase returns and allowances is 12,000. So you have to deduct that. And if you do that, from 214, 212 plus 2, 214, you deduct these two, and you're gonna get the net purchases. So, the effective cost of your purchases is 199,700. Okay? So, again, I call this your effective purchases. It's because you will not pay for 212 only. You have to pay also the cost of bringing your inventories from your supplier towards your location. Okay? But then again, this is not the cost because you enjoyed a discount of 2,300. And this is not the cost again of your purchases because you returned something to your supplier. Okay? So the effective cost of your purchases is only 199,700. Okay? Now, is that very important that I explain it like that? Yes, because I don't want you to memorize formula only. Because memorizing formula without any without any understanding will lead to forgetfulness. Okay? So you have to understand everything. Okay? So imagine if ever there are merchandise inventory that was not sold last year, plus you purchased new items, 199,700. If you add them all up, of course, it will result to total goods available for sale, which is very literal, right? The unsold last period or last year, last period, in this case, last period, plus your new purchases is the total goods that the company will be able to sell, the maximum. So you have 625,700. Okay? Now, if this is the total goods available for sale and if there is an ending inventory, that means not everything was sold. So you have to put the merchandise inventory in. So according to the problem, based on your physical count, the ending inventory is actually 453,000. So you have to deduct the 453,000. So if this is the available for sale and there is 450,000 for 53,000 that was left, then that means the difference will be the cost of goods sold. Supposedly, I'd like to use cost of sales because I used cost of sales here. But I would like also to let you see this because this is an alternative account that is usually used by different companies. So it's either cost of sales or cost of goods sold. So 625,700, there is an inventory that was left in the warehouse, for example, of 453,000. That means what was sold, the cost of goods that you sold is 1. So I'm not going to put it here because I'm using the indent style. So the cost of goods sold is actually 172,700. So if the sales is 718,150 and the cost of the goods that you have sold is only 172,700, you'll be happy because you'll have a big gross profit. Because actually, Sales minus or net sales minus cost of sales is gross profit. So 718, 150 minus 172, 700, you're gonna get 545,450. But then again, this is not yet the net income because there is a second type of expense that I've told you, the operating expenses. Yeah. On the operating expenses, we've already considered this. Yep. How about this 2,000? Yeah. We have other operating expenses, like for example, representation expense. That's part of general and administrative expense. So let's first start with the selling expenses. What are those expenses that can be grouped under selling expenses? We have freight out. Yeah, freight out or transportation out. So if freight in is very vital in computing for the net purchases, the freight out is part of the operating expenses under selling expenses, together with commission expense or salaries of the sales lady or else rent of the store in which you are displaying your items, something like that. So those are selling expenses. Those that are incurred because of selling the item will be part of the selling expenses. Okay? So that includes also the freight out. Again, freight out is actually under OPEX, under selling expenses. So freight out is how much? Freight out is 3,000. Are there any other expenses related to that? Related to selling expenses? No, there's none. So the selling expenses total is actually 3,000. How about general and administrative expenses? Again, administrative expenses are salaries for executives, for example, the salaries of the HR. So those that are related in administration of the company and they are not directly related in the operations really of selling the merchandise will be part of the administration expenses, and all those that could not be classified is general expenses. So in here we have representation expense. This is supposed to be in line with the selling expenses, general and admin expense. So representation expense, representation expense is how much? It's 9,000. And then the interest expense is a finance expense. So we're going to put that later on. Actually, you can operating expenses and finance expense. You can put that here. It depends on the company. So let's put that. So representation expense first. We have insurance expense. The insurance expense is 2,000. And then the depreciation expense. Oh no, the space is, I thought it is not as long as this. 7.5. And aside from that, we have supplies. The supplies expense is 24,000. And then the salaries is 73,000. So all in all, the general and administrative expenses are 9,000 plus 2,000 plus 7,500 plus 24,000 plus 73,000. Oh no, again. 9,000 plus 2,000 plus 7,500 plus 24,000 plus 73,000. 115,500. 115,500. So let me check first. So representation is there, free out is there, insurance is there, depreciation is there, supplies is there, salaries is there. We have already considered this. So the last one is the finance expense, which is interest expense. So finance expense includes interest expense, bank service charges, and etc. So you have 8,000. Ano? First, it should be here, and then the total here is 8,000. And then we have to total all of the operating expenses starting from the freight out. So 115,500 plus 8,000 and another plus 3,000. And we will get a total of, let me put here the total, 126,500. So from the gross profit of 545,450, we minus the 126,500, and we're gonna get a net income of how much? 418,950. So that's how you're gonna present your statement of comprehensive income. Now, how do we know if it is correct? Of course, that particular amount, if it coincides with your worksheet. So you can see here we have 489.50 as the difference in the income statement and the statement of financial position, debits and credits columns. Then you got it right if ever. Okay? But then again, if ever you are wrong in the general journal and the recording, even if all of the debits and credits are balanced and you have produced this unadjusted trial balance that is balanced and the adjusting entries, even if it is wrong, as long as it's balanced, it will be like this. Okay? So it does not guarantee that if everything coincides, that's correct. It depends on your analysis on the general journal entries as well as the adjusting journal entries. Okay? So I guess I have to let you absorb this first. The other financial statements, we are going to talk about that on the next episodes. Is it okay with you? It is. So this is the shortest video that I have taped, and I want you to play and replay this one because this is very important. This is a little bit, or it's far complicated versus the income statement that I have taught you for service entities. But it's easy. Now, lastly, in making financial statements in the actual, aside from the logo, the name of the company, and this heading, sometimes it's comparative in nature. Comparative in the sense that if this is the statement of comprehensive income amounts for 20x5, there is a comparative figure for 20x4. Of course, the indent style will not be effective if the financial statements are to be presented in comparative format. So what will happen is that in the actual, if the financial statements are comparative in nature, these net sales will be gross sales, sales discount, sales returns and allowances. The total, the 718,150, will not be indented there. It will be written alongside these items. Although, the style in the documents, they are going to bold the 718,150, thicken the font so that it will be emphasized that that is the total. And then the cost of sales will be computed, merchandise inventory, and then in one line, it will not be indented. In one line, they are just going to thicken the totals, like the cost of sales of 172,700 will be thickened. So the thickened 718,150 and the thickened 172,700 will be a thickened gross profit. So in one line, so that the 20x4, for example, or the past year figures will also be one line also. Okay? So that's it for this video. If you learned, please click like, subscribe, and hit the notification bell. And see you on my next one.